morning to you all. You must bear with me. I'm struggling with a challenge in my throat, so it will be grateful for your patience in dealing with that. First, let me thank ACSIC and the member delegations who are here for keeping the faith and enabling the Central Bank of Sri Lanka to host this conference in Colombo. As the Deputy Governor said, we are deeply grateful that you are here for this conference at this time. I must also thank my colleagues in the Regional Development Department, present colleagues, former colleagues, who have worked very hard in making this conference a reality. As you all know, there were uncertainties along the way, and they've had to deal with all that, but our gratitude goes to them for making this today a reality and for enabling us, I hope, to have 2 extremely productive days of deliberations. Now, it is a great privilege for the Central Bank of Sri Lanka to host the 32nd Annual Conference of the Asian Credit Supplementation Institutions Confederation in Colombo this year with the theme of Credit Supplementation Towards Sustainable Development. ACSIC is the largest Asian cooperative body for SMEs, consisting of 16 member institutions from 11 countries. As such, it is a privilege to contribute to its objective of promoting and developing sound credit supplementation systems by hosting this conference. I'm confident the deliberations over the next 2 days will facilitate the participants to share their knowledge and experiences on credit supplementation through constructive exchange of views. In any economy, it is the small and medium enterprises sector that nurtures inclusive economic growth and social inclusion. In addition, the SME sector generates employment, reduces inequality and poverty, and promotes entrepreneurship and innovation. Further, SMEs contribute significantly to balanced regional development as well. According to the Ministry of Industry and Commerce in Sri Lanka, the SME sector accounts for more than 75% of the total number of enterprises in the country, provides 45% of the employment, and constitutes 52% of GDP. According to the latest published information, the MSME sector comprises more than 1 million establishments, and around 2.3 million persons are engaged in working in this sector. Recognizing the importance of this sector for economic and social well-being, various initiatives have been introduced by successive Sri Lankan governments and non-government organizations to strengthen the SME sector. Access to finance, as you all know, plays an integral role in SME development, and the Central Bank of Sri Lanka is primarily entrusted with the responsibility of facilitating, supporting, and strengthening the mechanisms for easy and affordable access to finance for SMEs. However, there are several constraints faced by SMEs with regard to access to finance. These include high interest rates and the emphasis on collateral by lending institutions. These are the most frequently cited constraints affecting MSME development. Further, the contribution of SME financing by formal financial institutions is limited, and hence the private informal money lenders play a key role in SME financing, though at exorbitant interest rates. In addressing the constraints faced by SMEs in Sri Lanka, the Central Bank has continued to coordinate, facilitate, and implement various refinance, interest subsidy, and credit guarantee schemes. These are funded by the Central Bank, the Government of Sri Lanka, international donor agencies, and commercial banks. The Central Bank has disbursed loans under 9 refinance schemes and 2 interest subsidy schemes through participating financial institutions. In addition to implementing the various schemes, the Central Bank provides a range of credit supplementary services to individuals and SMEs across the country. These comprise both credit guarantee schemes and insurance schemes. So let me turn to credit guarantee schemes first. The government has funded the new comprehensive rural credit scheme, which serves as an interest subsidy scheme. It also has a supplementary credit guarantee scheme as part of the whole program as well. The interest subsidy is provided to small-scale farmers for 33 short-term crop varieties under this program. In addition, during the first half of 2019, the Central Bank and the Ministry of Finance entered into an agreement to implement a government-funded partial credit guarantee scheme to be operated under the government-funded Enterprise Sri Lanka program. As an initial step, government guarantees are provided to the participating banks for loans not exceeding rupees 1.5 million, which are not secured through project assets. The partial credit guarantee scheme is applicable for the Ran Aswenna, Govinavoda, Jayasura, Tirisavia, Working Capital, and Green Loan schemes of the Enterprise Sri Lanka program. The Sri Lanka Export Credit Insurance Corporation also provides credit guarantees. These enhance the creditworthiness of exporters to secure better facilities from their banks. The guarantee assures that in the event an exporter fails to discharge his or her liabilities to a financial institution, resulting in the bank incurring a loss, SLESIC will reimburse a substantial portion of their loss. Now let me turn to insurance schemes. The credit insurance is another important credit supplementation instrument. The crop insurance scheme was introduced to Sri Lanka several decades ago. It was first introduced as a pilot project. Later, the Crop Insurance Act number 13 of 1961 was enacted to provide the required legal framework for the operation of regular crop insurance. The Agricultural Insurance Law number 27 of 1973 came into operation in 1974 to make provisions for a more comprehensive scheme. The Agriculture and Agrarian Insurance Board was established in 1999, and it is now responsible for undertaking the government crop insurance program. SLESIC also provides customized export credit insurance to SMEs in all industries. The export credit insurance scheme offered by SLESIC provides protection to exporters against commercial risks such as non-receipt or delayed payments, insolvency, non-acceptance or repudiation of contracts due to commercial and political risk associated with dispatching goods or rendering services to foreign buyers. In addition, the National Insurance Trust Fund offers agricultural loan protection insurance. This benefits the financial institutions that contribute to the crop levy by helping them to manage the risks incurred in lending for the agricultural sector, for the paddy sector in particular. That is the rice production sector. So the central bank is involved in both guarantee schemes as well as credit insurance schemes. And there's also support from the Sri Lanka Export Credit Insurance Corporation. And the government of Sri Lanka funds these. So let me now turn to awareness programs. The central bank also conducts awareness programs and workshops to promote financial literacy and financial inclusiveness. These focus on those who have no access and have been excluded from the formal financial sector. It also conducts several programs on entrepreneurship and skills development, especially targeting the young and women. There is wide participation in these programs, and the majority of the participants, up to 70 to 80%, are women. During the first 9 months of 2019, the central bank conducted 95 such programs for more than 10,500 participants, and these were on financial literacy as well as entrepreneurship and skills development. In recent times, the Central Bank of Sri Lanka has taken some concrete measures to enhance the inclusive and balanced nature of economic growth while increasing financial inclusion in the country. And these include the development of the National Financial Inclusion Strategy the Deputy Governor alluded to, with technical assistance from the International Finance Corporation. The Central Bank's Regional Development Department, jointly with the IFC, has identified relevant government, semi-government, and private institutions in academia as stakeholders for the National Financial Inclusion Strategy project. The key objective of the NFIS is to promote a more effective and efficient process to improve financial inclusion across the country. Accordingly, 4 policy pillars have been identified. These are digital finance and payments, MSME finance, consumer protection, and financial literacy and capacity building. Meanwhile, the central bank also initiated a financial inclusion strategy, which again the Deputy Governor alluded to, and this work has been stewarded by our Senior Deputy Governor, Dr. Nandalal Veerasinghe, and it has been launched both in Colombo and at the time of the annual meetings last year, at the IMF World Bank annual meetings last year in Washington. A financial inclusion survey with the assistance of the IFC has also been conducted to understand the overall landscape for financial inclusion levels across the country. The survey was conducted successfully, covering all the districts of the country, and the final document is close to finalization, and it's expected to be launched by the end of this year. In addition, the central bank launched the roadmap for sustainable finance in Sri Lanka. I'm sorry, this is the program that's been stewarded by the Senior Deputy Governor, Dr. Nandalal Veerasinghe. Launched a roadmap for sustainable finance in Sri Lanka in June 2019. This aims to provide guidance and support for financial services providers for effective management of environmental, social, and governance risks associated with projects financed by them, and to increase support for businesses that are green, climate-friendly, and socially inclusive. Now, I think while credit supplementation initiatives are extremely important, I think all of you will agree that their impact can only be maximized if the overall environment for SME development is conducive. And here I think it's important to have a holistic approach, and there are probably 4 areas where there has to be effective intervention. 1 is training, 2 is access to inputs and technology, 3 is access to finance, and here clearly credit enhancement is very important, and finally marketing. In my view, the most intractable problem is marketing. If the marketing channels are cleared, even access to finance and everything else becomes much, much easier. Often, certainly in Sri Lanka, we've had numerous SME development programs, but we have tended to focus on the production function and not paid enough attention to marketing, to linking up MSMEs and SMEs to supply chains in their own locality, in the region in the country, or the national economy, or cross borders. I think it's crucial to make sure that one focuses on the marketing aspect as well, because that is the most intractable problem. And if you resolve that problem, one finds that the other issues become a lot easier. The second more general point to make relates to the institutional architecture for supporting SME development. Speaking from our own experience in Sri Lanka, we have a plethora of institutions trying to assist in SME development. However, there is a challenge in terms of coordination and cooperation. So I think it's important to rationalize the institutional structure to support SME development and to ensure there is strong cooperation and coordination across the institutions which are working in these 2 sectors. So a holistic approach and strong, robust, focused institutional structure are important to create the overall environment for making credit enhancements, credit supplementation initiatives more effective. With that, let me wish all of you very productive and constructive deliberations over the next 2 years. And also, as the Deputy Governor said, I hope you will have time to enjoy Sri Lankan hospitality, and if you have even more time, to enjoy what this country has to offer in terms of great natural beauty and cultural heritage. Thank you very much.